Hello and welcome to Gold and Silver Assets. It's Sunday the 6th of December 2020. I've had some questions regarding my preference regarding the precious metals. Should I buy gold or silver? Although I could just give you a black and white answer for this, what works for me won't necessarily work for you. We're all individuals living in different circumstances all around the world. And therefore, I think it's much more useful for me to discuss the factors that are worth considering when making such decisions. The first question that you should ask yourself is, why are you buying precious metals in the first place? Are you using it as a store of wealth with the aim of maintaining your purchasing power? This is, of course, a form of savings and could also be considered as insurance. The other reason for owning precious metals is for the capital gains, in which case it's important to decide what timescale that you're working on as well. But let's look at each of these factors in turn. If we're looking to preserve wealth, then we want the metal to maintain its purchasing power. But which out of gold and silver has historically been better at doing this? I did struggle to find much on this topic, but I came across this chart which covers the full fiat era and shows the purchasing power of the US dollar. That's over here, and you can see, yep, that definitely dumped over time. And that's versus gold and silver. That's shown by these yellow and grey line respectively. And it's very interesting. We can see that historically, gold has consistently been better than silver as a store of purchasing power, store of value. The only exception to this was this spike over here in around 1980. But in general, this suggests that gold is usually the better out of the two in terms of storing purchasing power. One of the big reasons that gold is a better monetary metal than silver is because of its stock to flow ratio. And that ratio is basically the existing supply divided by the annual production. This chart shows the stock to flow ratios for various metals and commodities. The most suitable thing to use as money is something that has a high stock to flow ratio. And ideally, you want a stock to flow ratio that doesn't fluctuate very much. We can see here that gold has a much higher stock to flow ratio than silver. Silver is consumed because of its industrial applications, and it's also more abundant in the ground, and so is easier to mine in some ways. And therefore, its stock to flow ratio is lower. The other thing is that it does tend to fluctuate more than the stock to flow ratio of gold. Although silver standards have been used historically, you'll note that they've never really worked out as well as a gold standard has, and that's because of this stock to flow ratio issue. If we're thinking of capital gains, there are a few aspects we can look at, and one is the asymmetry of the bet. Here's the chart comparing gold and silver prices in US dollars on the monthly scale. So the gold price is shown here in gold and the silver price here in grey. Now, regardless of whether we make this comparison in absolute terms or percentage terms, the result is still the same. The bottom of the gold price is here. So we've got this kind of trading range over here. And gold broke out of that bottom and actually surpassed its previous all-time high. In silver, the bottom was over here. And again, we kind of got a trading range over here. And silver also broke out of that bottom, but it's nowhere near its previous high there in nominal terms anyway. If we assume that these are indeed bottoms, which I think it's a fair assumption to make, then the downside of silver looks far less than the downside for gold. But of course, both have potentially large upsides. Therefore, my assessment is that the asymmetry is greater for silver than it is for gold. Another way of deciding which is the best value is to look at the gold-silver ratio. This is the chart of the gold-silver ratio on the monthly scale, and as we discussed in a previous video about valuations, this ratio seems to be one that mean reverts. That means that when values reach extreme levels, then we can expect it to reverse back to mean levels. Over here, when the ratio was at historical highs, over 120, then there was no doubt that silver was the better value at that point than gold was. Another thing to look at is the beta of silver to gold. Beta is the relative change in price between two assets. So a beta of 1 means that both move by the same magnitude. This chart shows that over the last 20 years, the beta of silver compared to gold was around 1.2. And I was actually expecting this to be much higher than that. But nevertheless, this does tell us that silver can give greater capital gains relative to gold, but it also means that the losses can also be greater as well. How much volatility can you stomach? This chart shows the daily difference in price changes, and on this chart, any values above 0 mean that silver had a greater percentage move than gold. But remember that this chart doesn't tell us which direction that move was. But it does show that the silver price is much more volatile than gold. So remember, although the rewards for silver are greater, so are the losses. Once we've confirmed our reasons for buying gold or silver, the next step is to take the following factors into account. So we're looking at premiums, affordability, storage, taxes, and loans and leasing. So let's look at each of these factors in turn for those two metals. Just a shout out to Greg from didthesystemcollapse.org, who's been very helpful to me. What he does is provides charts of premiums over spot on his website, and at the moment the premium for gold in USA is around 8%. The premium for silver is much higher than gold. It's around 20% at the moment. It did get as high as 60% at one point though. In terms of affordability, silver has the advantage. So a double-digit per ounce cost for silver is much more accessible than a triple-digit cost for gold. And that's particularly important for those working on smaller budgets. It's also easier to liquidate in small amounts, and so can be useful for easily making small everyday purchases if needed. Storage can be an issue because silver takes up a lot more space than gold does. Silver has half the density of gold. But not only that, remember that the value of silver per ounce is also much lower than gold. So from this we can see that the density ratio is 1 to 2. Let's work on a gold-silver value ratio of 1 to 70. Then that would mean that you would need 140 times the space to store the same value of silver compared to gold. That's quite a lot. As a result, the storage fees are understandably higher for silver. Here's an example of some of the monthly fees for the metals. And in general, for most places, you'll see it costs about 4 times more to store silver than it does for gold. In some places, the taxation rules can differ between the metals. For example, in the UK, there's a 20% value-added tax on silver bullion purchases. So if you think about it, that means that you would need the price of silver to go up not only 20% to make up for this tax, but remember you've also got to account for the premiums and storage fees. And so all of that needs to be taken into account just to break even. Capital gains taxes are, as far as I know, usually the same for both gold and silver in most countries, but it's worth checking on this in your individual country. As an aside, the taxes can also vary for legal tender coins versus bars. And finally, we come to loans and leasing. Now, this isn't such a big thing at the moment because very few people actually own precious metals, but it's likely to grow if the precious metals become more mainstream. In general, it's much easier to obtain a loan using gold as collateral rather than silver. And if leasing of metals becomes mainstream for obtaining an income, then I suspect it'll be easier to lease gold rather than silver due to the monetary metal status that we discussed earlier. In conclusion, everything we've talked about today shows that both gold and silver each have their merits. I prefer to own both, and the weighting will depend on your individual situation and how that relates to the factors and considerations that we've discussed here today. Next up, the market update. Now, let's start with gold priced in New Zealand dollars on the monthly scale. And the reason I'm showing New Zealand dollars is because I want to show you something. This is, as I said, on the monthly scale, and this goes back to 2008-ish level. And what I've done here, we've got these vertical blue lines that I've drawn, and these are cyclical lines where each line is at the beginning of the first week of December each year. Now, as we've seen over here, we've reached what I think might be a bottom. There's two reasons for that, and one of them is that I've joined these two lines, these two lows over here, and extended that up. Over here, you see it didn't quite reach that line, but here it is at that line there. Now, what you'll notice is if we go backwards, over here, the low was on the first week of December, and then price just went up from there. Let's have another look at the previous one. Again, the low was over here in the first week of December, and price went up sideways a little bit, then carried on upwards. And over here, we've got a little low over here, and from here, price kind of went sideways, but it was generally upwards in the ensuing kind of 4 to 5 month period. That's what we're kind of looking at here. The next one over here, price went up. Another one over here, price went up. So we're seeing a pattern here, aren't we? And again over here, price went up. And so remember, we've got a mixture of bear market and bull market moves over here that we're talking about. And now that's not to say that that has always occurred. Remember that here we can't talk about certainties. The only thing that I can be certain of is that gold is not going to zero. But beyond that, all I can do is talk about probabilities. If you hear anyone tell you that they're certain what's going to happen and they tell you that you're definitely wrong, that's a con job. Just ignore those people. Anyway, so let's go a little bit further back. So over here we had a low and price kind of went sideways, but then this one over here was pretty bad. Price dropped quite dramatically. But then if we look before that, again, generally price tends to go up after that date. So overall, you know, we can say about 80% of the time at least, haven't done the calculations here, but more often than not, if you buy in the first week of December in New Zealand dollars anyway, then price tends to go in the upwards direction, but the magnitude of that can vary depending on various factors there. But to me, those are pretty good odds, and that's why, for me, I see this as a buying opportunity. Not only is the seasonality timing kind of fitting, but also it kind of fits with this trend line as well. And so I'm not certain that that's going to happen. I mean, it could well break through this line. And that's the thing, is you have to be accepting of all possibilities, but you also do have to make a call at some point. Okay, so that's the New Zealand dollar. Let's go back to look at gold priced in US dollars. And this time we're looking on the daily scale. And last week was quite interesting. As you know, I called the bottom over here. Of course, I only do these shows once a week. So if I hadn't have done that, then I'd have completely missed it in terms of telling you anyway. It did go down a little bit further after that. But remember that I had drawn this blue line, and that line's been there for months, really, hasn't it? And it just bounced off of that last week. So is that the bottom? That's what we want to know. It was quite interesting in the comments last week, because we had quite a few who were bearish, and they thought, no, maybe that's not the bottom. And that's not a problem. I don't have a problem with people having a different opinion from me. I don't know for certain that I'm right, and I don't think anyone can say for certain what's going to happen here. But I thought the interesting thing was, not only in this channel, but I had to flick through comments on other channels. And again, a lot of people were feeling negative about the gold price. I remember one person on another channel saying how they were a newbie and they'd bought up here and they were ready to throw in the towel over here. And so that kind of, the bearish sentiment seemed to overwhelm the bullishness there. So is that an indicator? Possibly. I don't know for sure. Another thing that people said was that, oh, well, it's broken this 200-day moving average over here, so it's going down. Well, there's a couple of things there. First of all, it just poked below it, but then it just sprung back up quite strongly and went back above it. Now, if we look back in March, a similar thing happened. It broke that 200-day moving average, but that didn't mean it was a bearish signal. So, I don't use that 200-day moving average that often. I used it here to help us with looking for a target, but from after that, I don't use it that much. I would be much more bearish if it had gone below, went up, retested it and failed. That's when you'd start to worry a little bit. So that doesn't worry me at all. Where do we go from here? Could it still be bearish? It certainly could be. I think to confirm the bullishness, we'd have to go up above this 1960 kind of level. And then, of course, we'll be extra confident if we go above here. In terms of where we go from here, one possibility is that we drop back and either possibly bounce off and retest that, or it could even just move up from here. We've just got a little bit of an indecision candle here, and so that's why I'm not certain where this is going to go. But in terms of support levels below, I think we're looking at about 1800. And again, that would coincide with that moving average there. But again, it could dip below that briefly and come back up again. If it does, then the next support level is back at around 1965, in which case that could potentially be a double bottom. And again, that would kind of coincide with this downward sloping trend line here. If it goes below that, then the next support level I'll be looking at is maybe about 1740 over here, and possibly this lower trend line here. But I don't know. I'm a bit skeptical that that's going to happen. But remember, anything's possible. So we're just looking at all the possibilities there. But for me, I'm thinking this trend has changed. I hope you all appreciate how brave I was calling the bottom over there. I don't like to call things like reversals, but that's what I think. Okay. Now, why do I think that this is actually going to be good support here and that we're going to go up? Well, let's move on to gold priced in US dollars on the monthly scale. And of course, everything dates back to this price action over here. And so my feeling was that because we had surpassed this all-time high, then the chart, if we do go back and retest, we would retest these levels here. So first of all, we retested the wicks, and then we're retesting the bodies of these candles. And so there is a big chunk of action over here around the 1740 level over here. And so those are the kind of areas that I think will be reasonable support there before moving up. Now, someone else mentioned talk of a cup and handle formation, and that's why they were thinking that this could be bearish potentially. There's a couple of reasons why I'm skeptical of that. Of course, it is possible, but the reason I'm skeptical are that, first of all, we surpassed this previous high. Usually, my understanding of a cup and handle is that usually it would have turned around at a lower level before it got to that high. And then, if we're looking for a big handle, that's the other thing. You've got to look at the proportion of the handle compared to the size of the cup. And, most of the time it's we're talking about a quarter, fifth of the size of the cup. And so then we're talking about, another year of sideways movement. Given the environment and all kinds of things could occur, I'm a bit skeptical of that, but look, it's possible. But if that were the case, then we'd be looking at something where, like I said, it would probably take up to a year before we would get another breakout to a new high there. Let's move on to silver priced in US dollars on the daily scale. And last week we were talking about how low this could go. And I was talking about maybe it could go down to 20.8. Now, it didn't actually go that low. And interestingly, unlike gold, it didn't make a new low. It didn't go lower than this price action over here, whereas in gold it did. So silver's looking pretty strong, actually. And so obviously with these things, we can't have fixed ideas about what the price is going to do. We have to use new data to adjust our ideas. And so this is new data here, this low here. And then we've got to think, well, what could be going on here? What could the pattern be? And, often what can happen is that you think one pattern's forming and then something happens to make you think, oh, no, actually it's something else going on. And so you do really have to be flexible. You can't have fixed ideas about these things. Anyway, so could this be a triangle that's forming? Possibly. In which case, if we do drop, and we don't necessarily have to drop down here. I mean, price could actually, since it's looking reasonably strong, it could actually just carry on. I mean, this could be a flag, actually. We've got a pole, a flag, and then price could just burst up through there. This is the line that we're looking at for a breakout. Whatever the pattern here, though, to me, it's looking quite bullish still. And so, as I said, if it doesn't go up, if it goes down early in the week, then in terms of support, I'd say we've probably got support around here, so around the 23-ish level, and then it could turn around from there. If we get a break of around the 22 level, that's when I'd be thinking that there's support a little bit further down over here at around 21. The thing with silver is that it can surprise us. It's one of those kind of wild assets here that you can't fully trust there. But look, this could go crazy and just burst through there just as much as it could go down here. But yeah, I think silver's looking pretty strong in general though. Let's look at the GDX. So the miners have been moving in this downward sloping channel, and it's taken a long time. We broke down below that channel, but then bounced back up again. I think we might go down to retest the bottom of that channel, at least if we do get a drop in gold and silver. And again, it depends on how much they move relative to the gold price, but it could either just retest the bottom of that before moving up, in which case you've got a double bottom there, or potentially if they get affected more than the metals, then there is a possible chance it could go down and retest this, but this is quite strong support over here. Overall, I think the downside for the miners is pretty limited. The upside is quite large. I'm not going to be able to tell you where the exact bottom of this chart is. It is a tricky one. Let's move on to the silver junior miners. So this is the SILJ on the daily scale, and again, it's looking pretty strong. We've had this kind of sideways movements for quite some time. They haven't been as badly affected as the GDX, it seems, but I think that price will probably dip down a little bit to fill this gap over here potentially. I think the lowest it will go is over here, just above the 13 level. If it drops below that, then we're looking back at around the 12 level. But again, these are looking pretty strong. And if it does hit the 12 level, then I would expect a turnaround there. If it doesn't get to there, then the turnaround would happen here. And we're looking for a breakout once we get to around 1550. And again, I would expect that to be pretty strong. So again, not a huge downside, but a lot of potential upside here. That's it from me for this week. I just wanted to say a big thank you to our members and the supporters on Library who have been supporting the channel. I really do appreciate it. Thanks so much. Also, you can support the channel by liking, and if you haven't already subscribed, hit the button and don't forget to hit the bell notifications as well. All the best. See you next week. Bye.